And happy Monday, everybody. I'm Rob Booker, best-selling author of Blah, 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 and yada, yada, yada. Every once in a while, I will have a trade that goes wrong. And today, nothing's really gone wrong. We're going to take a look at the account. And we haven't looked at the robots in a while, so we're going to check in on the robots. And I want to look at a couple of charts. I mean, I do have one trade that's kind of gone the wrong direction, and we can take a look at that one together. But what I want to do is spend some time sort of talking about getting involved in a trade before it really starts to go wrong, and getting involved and taking control of a situation before it becomes a total mess. Staying ahead of the game, staying ahead of the situation, staying ahead of difficult times, staying ahead of bad stuff that can happen, you know, that kind of thing. Super happy that you're here. Welcome to the broadcast. I'm going to check the chat window. I'll have that ready to go so that if you want to post a message and say hello and tell us where you're from, that would be absolutely fantastic. Super excited to be here together with you on a Monday, and let's take a look at the charts. I'm going to keep this screen right in front of me here so that I can see when I mess up. Okay, this is, what you're looking at right here is one of two primary robot trading accounts. One has, well, let's just check the balance here. One has $10,860, and the other has $168,000. Both of them essentially mirror each other, but they're not exactly the same. And so let's take a look. This window right here, this salmon-colored pink window, reflects the fact that all of the robot trades were closed when an equity goal was reached. And the background changes color, and that lets me know that an equity goal was reached, and then I changed the background color back to black just to make sure that now I reset everything. Now, my robot will keep closing trades, all of the trades. As many of you already know, the robot will just close every trade as soon as the account has grown a little bit. So as long as the account has made forward progress, it will close all the trades, even the losing trades in the account. And it does that so that I have no losing trades that just stay open and go wrong forever. And just checking my microphone there, making sure everything's okay. That means that I'm going to have small, consistent, and repeatable gains over and over again over time. Now I'm going to mute myself. Be back. There we go. Okay, so I'm going to look for small, consistent, repeatable gains over time, even if they're small, and they're just going to start compounding on top of each other. And the entire goal is 2 to 3% per month. 2 to 3% per month, 24 to 36% per year, which will beat the market on average every single year, and doesn't seem to be that difficult for this to achieve. Now, why am I saying all that? Because there's a caveat, and there's a big but. There's a big but. And the big but is, every once in a while, and occasionally, things go wrong, and a trade goes bad, and the trade stays open, and then I got to deal with it, and then I have a problem on my hands. And right now, that problem is the British pound Swiss franc. And what I want to do is I want to show you the 5-minute chart where it's running. Excuse me, let's see, the 30-minute chart where it's running. Now, why in the world is this running on the 30-minute chart? Usually I run robots on the 1-minute chart. Well, somehow I changed this over to the 30-minute chart. I don't know when, and I don't remember how, and I'm a dummy. And this opened up a trade. So let's see what my settings are on this robot. It can take buy and sell trades. 1 microlot is the first trade, 3 microlots is the second trade, and it waits 70 pips to take trade 2. Well, if I'm on the 30-minute chart, I'm going to wait at least 150 pips before I take a second trade. So now I have this stupid trade open that isn't going well. And what I want to do is I want to look at the 60-minute chart, and I want to see, well, is there anything going on this 60-minute chart that can help me out? What's happening in the bigger picture? in the bigger picture, is anything going on that I might be able to take advantage of? Can I take another trade? And the answer is no. In fact, we have some divergences, and you see these divergences on the chart here. I'll show them to you a little bit more specifically. So here's bearish divergence, and here's bearish divergence. So there's 1 and 2. I'd really like to see a third one before I take any additional trades. So for right now, I just kind of have to sit back and wait for this trade, and I'm not going to do anything about it. And every other trade in the system is really not that bad and not really any big deal, and I don't really care about them. Let's check out. Sema says hi from England. Jose de Jesus Rodriguez says hi from Guadalajara, Mexico. Any advice for a 21-year-old passionate about Forex? Yeah, I definitely have some advice for you. I'll pull up the next chart we're going to look at, which is going to be the US dollar Mexican peso, and maybe even the euro Australian dollar. So let's talk about what I would do if I were starting over, and what I would do if I were young, and what I would do if I didn't have a lot of money. And the first thing that I'd have to make a decision about is, what am I going to do to support myself while I learn how to trade? And how hard am I willing to work, and how much time am I willing to put in? If you're 21 years old, you have the whole rest of your life ahead of you. You have an immense amount of time. You have more energy and strength and health than you're ever going to have for the rest of your life. And my recommendation would be, you get up early, you do your trading, you set your orders, and then you go work 1 or 2 jobs, and you save 50% of what you make. And you save that money for the purpose of putting that money into your trading account. And you save as much money. You live as cheaply as you can. You borrow other people's Netflix accounts. You spend as little money as possible on food. You don't worry about going out on the weekends and spending a bunch of money with your friends and drinking a bunch of alcohol. In fact, I didn't drink when I was 21. I would do as much as possible at that age to save the most amount of money as possible and keep myself in the best possible shape and keep myself in the greatest mental condition that I could possibly keep myself in. That's the first thing that I would do, is get my life and my mind right. Especially that first. Not worry about the trading system, not worry about the financial instruments, not worry about how much money is in my trading account. First, worry about who I am as a person and what I'm going to do to focus my mind and stay strong. That's 100%. The second thing that I would do is, and I think I mentioned this in the first thing, I would get my financial stuff in order. I would have absolutely no credit cards as a 21-year-old, absolutely zero debt as a 21-year-old. I would live with friends or live with parents or live with others, share expenses, not worry about my privacy, not worry about living like I was rich, not worry about living the way I'm going to live when I'm 40. And by the way, if I'm 47, and I think all of this that I've already said still applies to me now. Only I have children and a family and people that I take care of. But everything else, get your mind right, get your you-know-what together, get yourself together, get that right, and do not spend money. Spend as little money as possible and keep as much money as you can in your savings account, and put as much money as you can, 50% of what you make, into your trading account. The third thing I would do is I would make a decision about whether I wanted to be a trader who wanted to be aggressive and try to make a lot of money in a short period of time with a significant risk of losing everything. And that's not me being sarcastic or negative. If I want to be aggressive and try to grow a small account into a lot of money in a short period of time, I would have to accept that there is a 75 to 90% chance that I'm going to lose the entire trading account. And so maybe I accept that and I say, well, I'm 21, fine if I lose all of that. And what people will often say is, fine, I'm okay losing all of it. And then they lose all of it and they feel terrible and guilty and horrible. And what they don't realize when they're making the decision is they're hopeful and they don't think they're actually going to have to lose the money. They hear the statistics, but they don't believe them. Or instead, grow a small trading account, because that's all you can have, slow and steady, 2 to 3% a month, and get a track record. Now, I think you know exactly which direction that I would suggest that someone goes. 2 to 3% a month, get a track record. If you live outside the United States, get your account on DarwinX and start tracking your performance and start showing other people that you can have small, consistent, and stable gains using one system, one method, trades planned at 1 or 2 times of the day maximum. And you can save aggressive, try to build your account really fast type of trading for later on. For later on in the game with money you know you can afford to lose because it's most likely going to be lost if you get super aggressive. So let's take a look at the charts, and I'm going to take a look at a couple of different things. One is the Euro-Australian dollar. That's what we're looking at right here. The Euro-Australian dollar is the worst human being in the world. If it were a human being, it would be the worst kind of human being in the world. This is the currency pair that's going to cause you pain. It's going to come back crying at your front door. It's going to say, take me back. And then you're going to take it back, and then it's going to stab you in the chest in the middle of the night. That's what this currency pair is going to do. It hates you, it wants to kill you, but it also wants you to love it. And this currency pair is a great example of a currency pair that you could use to take advantage of the fact that most people are going to fall for this garbage story right here. Take me back. I promise I'll never do it again. I promise I'll never go into a giant, significant, major loss anymore. I promise you can trust me, but you can't. And what I would do is I would wait for the Euro-Australian to print 1, 2, 3 times divergence. I love divergence. I would wait for 3 divergences. If not also for the relative strength index to go overbought or oversold on 5 time frames simultaneously. I have talked about this system 975 million times. And then, after 3 divergences and a relative strength index oversold on 5 time frames simultaneously, I would buy that right there. And I would look at the charts once in the morning before I go to work and once in the evening before I go to sleep. Now, in the morning before I leave, if I was a religious person, I would get out my scriptures and I would do my devotion, my study, my pondering, and my prayer. If I wasn't a religious person, I would do some kind of meditative spiritual exercise, some connection to the higher power, the higher energy in the universe, and set my mind on discipline and focus, consistency, and staying on track. And then in the evenings, instead of wasting my time and melting my brain, I would read literature or books and the biographies of successful people that I would want to emulate. And I would choose 1 or 2 successful people to emulate, only 1 or 2 that have a historical track record of having accomplished what it is that you want to accomplish. And one of those people I would strongly recommend would be John D. Rockefeller Sr. He embodied the principle of saving all the money that you could possibly save and not spending it, and then building something for the future. The best book on that subject is Titan by Ron Chernow. It won the Pulitzer Prize for Literature, and it is absolutely spectacular. There's the book. That is maybe the best business biography that I ever read in my life. It was absolutely spectacular, and you can buy a used copy of this or get it from the library super cheap. Okay, back to the Euro-Australian. So once a day in the morning and once a day in the evening, I would look for financial instruments to go into an extended period of movement. Wait for it to get stretched out. One way of looking at this or thinking about it would be, wait for price action to become so significant and so extreme that you can imagine that anybody that got in on the wrong side of that move is now feeling an immense amount of pain and heartache and regret. And we don't hate those people. We love those people, and I wish the best for them. But we're going to be smart about the way that we do this. The greatest business people in history waited for extreme, difficult circumstances, and then they had a war chest waiting to take advantage of that. They didn't think about this. We often consider that our job is to time the market and wait for the big short. That's not our job. Our job is to wait for the big short when everybody is panicking and have a war chest available to do something about that, to take advantage of a discount on stuff that has dropped significantly. Look at Facebook, for example. Facebook just got rocked. And people that were long Facebook, right up here, panicked. They go like this. They absolutely go out of their mind, and they panic. And then, by the time it prints 1 or 2 or 3 divergences, all of those buyers have been shaken out. And all of the smart money that had money left over goes ahead and can buy Facebook at that point. I did this a few weeks ago on Stitch Fix. I have a box over here. I'm a customer. And what happened was, after earnings, this company got rocked. Totally rocked. And then 5 time frames went oversold, and I bought when everyone else was panicking. That's what I did. Everyone else was out of their mind with panic. I didn't have to predict the future that it was going to drop. I just had to wait until it dropped and then take advantage of the fact that it had gone on sale. Okay, that's I didn't show you any of that, even though I kept this thing in front of me the whole time. So I'll just walk through all of that all over again. Okay, so this is Stitch Fix. After earnings, everybody panicked and price dropped, and everybody went out of their mind and panicked. And you can see that really clearly here on the chart. Who cares what the earnings? I mean, I'm sure the earnings weren't even that bad. The earnings were 18 cents a share. The estimate was 4. It beat earnings by 376%, and the price still fell. And I was a customer. Here's Facebook. Everybody just panics. Everybody goes out of their mind with panic. And anybody who liked the financial instrument and wasn't panicking could take advantage of that. So just last week, I shorted the US dollar Mexican peso, and here's the chart. I shorted the US dollar Mexican peso in this area right here, and then it moved against me. And it didn't print any more signals, and so I just kind of have stayed in this trade because it has printed 3 divergences on the 4-hour chart, and I'm just staying in this trade. But what if I had just waited and not jumped in? I would have had a chance to sell it way up here at the top and then enjoyed the drop. What happens so often is that we don't wait for the signal. Here's the Australian dollar, US dollar. Interest rate decision coming out tonight. For those of you that are lifetime members, we're going to trade that news live together on a webinar. And if you don't know about becoming a member, there should be a link below this video or above this video. Here's the divergences and the RSI 5 right here. It's a perfect sell area for the Australian dollar, US dollar. Anybody who was selling in these areas is panicking, jumping out, and then we can come in and take advantage of the fact that most people make bad decisions about when to get in. Most people are terrible at making those decisions. All right, so got a bunch of our friends here. Was Matt in here? Did somebody say hi to Matt? Anyway, it's my pleasure to spend time with you. I've been thinking a lot about all of this stuff that we're talking about right now, and about setting your mind right in the morning. I've been making some notes about the Japanese principle of doing something really difficult once a year or even once a month. I think we're going to do a program next year, maybe even started in December, with lifetime members and, with lifetime members, where we do something difficult once a month, really difficult, and maybe even something a little bit difficult every day and a medium difficulty every week, and then really difficult once a month, so that we keep ourselves on track and keep ourselves focused, and remember that staying focused is really not that difficult. I've been making a bunch of notes about doing some kind of program like that and making an agenda and covering a topic once a month for the next 12 months. Anyway, it's been on my mind for a bunch, and if you're already a lifetime member, then you're in. That's awesome. And if you're not, it's coming. And I'm gonna send an email out today and put a link up to where you can get more information about that. And gosh, I love spending time with you in the mornings. I'll be trading the Australian dollar, US dollar live on the interest rate decision tonight. That's tomorrow morning in Asia, that's tonight US time. And if you're already a lifetime member, then you've already got an email with the link to that webinar. I can't wait to see you there. And if you're not a member yet, there should be a link somewhere in this video. Thanks for spending some time with me. I love you all. I will see you tomorrow morning, 9 a.m. Central Time. Bye for now, everybody.